Welcome everybody. I got a little bit late today. Had some technical problems, but now everything should be just fine. So this is going to be my pre-market technical analysis for before the U.S. market opens. And usually I do this due to the fact that the U.S. market is the biggest market in the world, and it is a lot of things happens when basically that market opens. So major news is what we're going to look at first. JP Morgan and the banks are doing really well. JP Morgan basically smashed its profit estimate. So pre-market for JP Morgan and the banking sector in general, it is very bullish. They're up roughly 0.5% and are expected to rally also when the U.S. market opens. So this could be also good for example, the Dow Jones, where we have JP Morgan also and Goldman Sachs. So if those stocks are rallying, then it should be very bullish for the banking sector and the Dow Jones as well. Bad news is that Apple will most likely drop as they have basically cut their production estimate for the iPhone 13, and that is definitely not a good thing. Cutting the production usually also means that we will see profits being down, and of course that will affect they will also affect their stock price. If we look at the cryptocurrency market, we can see that Bitcoin is it's doing fairly well. We're at 55K. It is down roughly 3.85% the last 24 hours. Otherwise, Bianca is doing really well. So you can see some cryptocurrencies rallying substantially, while others, for example, Bitcoin, have been rallying the last few trading days or last 2 weeks, and now are pulling back from the nearly the highs. Otherwise, if you look at, for example, indices here, then we can see that the US dollar, it is up 0.21%. We can see here as well that the VIX is down roughly 3%, and both of these are fairly bullish for the stock market. VIX, when it usually drops, the market goes up. So there's a negative correlation between those two. The same goes for the US dollar, negative correlation, and there is also negative correlation between the US yields, which is also down roughly 1%. So all three should mean that the market should rally today, but it has been hesitant and has rallied early and then sold off in the late afternoon. That's what happened on Monday, also yesterday, and we'll see basically what happens today. But economic news, what everybody is waiting for, and that is basically in 90 minutes. That's the core CPI numbers for September, whether or not there is expected higher inflation or not. If there is the actual number is higher than the forecast, that usually means that the market will drop due to the fact that it's expected for the Federal Reserve to increase interest rates if inflation gets out of control. But we'll see basically what happens. It has not been very accurate, the forecast recently. Last time it forecasted 2.1, the actual number was 4.0. Sorry. But inflation, as you can see, it has been significantly higher than it has been basically the last few years. It has been, if you just look at the last 2 years, we can see that it has been around 2.3 down towards 1.4, and it's kind of where you want inflation to be. When it gets to these levels here, it is basically too high, and it's a sign that the markets are they're overheating, and therefore central banks usually come in and increase interest rates in order to get the market to go back down, and also the prices to go back down. And that is usually also a very negative sign for tech stocks, as they are dependent on where to borrow cheaply. So if interest rates go up, then it will be negative for Nasdaq, also be negative for most of the tech stocks. So it will be we'll see what basically happens in 9 minutes. So we can go over to the technical analysis for the foreign exchange market, and as you can see, we have the Great British Pound here, and even though that the US dollar is depreciating, we also see that the Great British Pound and the US dollar is depreciating. But this was also expected. I got fairly nervous earlier today when this rallied all the way up towards roughly 1364, because it looked like we were going to go higher, but it got rejected yet again at the 20 exponential moving average. We did get towards the 40 exponential moving average. This was on Monday and got rejected there. And usually what happens when you get rejected this often in an area, it tends to go the other way. And that's what I'm hoping for. It may take a few trading days, but when it basically gets stuck at one point and can't go higher, it tends to basically go down before going back up. So yeah, MACD, it is bullish. RSI is flat. CCI is also fairly bullish. Stochastic is becoming bearish, and we are basically struggling here in the middle of the Bollinger Band. So hopefully it will drop towards this level. So US dollar, Japanese yen, it continues to rally today. We are approaching a major resistant area, which we basically tested yesterday. And if we go way, way, way back here, we can see that this has been an area of major resistance in the past. We see 1, 2, 3, 4, 5 times tested this area, and then it just collapses. So maybe we're lucky, and the same thing will happen here. But breaking above this resistance level here, then we could go significantly higher. But if we take the measured move of this flag formation, then we're basically at where we should be running into resistance. So if we pull back, then probably it'll go down to 112.04. If we look at MACD, it is bullish. The RSI is turning around slightly, but it is overbought. CCI is also turning around, but still in bullish territory. Stochastic is about to cross the signal line in bullish territory, and we're basically at the top here of the Bollinger Band. So due to this parabolical move here and historical resistance, and that the technical indicators slowly are turning around, I'm kind of hoping on a pullback towards this area. So Euro, US dollar. So Euro is rallying a little bit. We're up 0.07%, not that much, but we have kind of created a floor here. And usually it rallies before breaking this floor. We can also look at the MACD. It is crossing the signal line. It is bullish. The RSI is significantly oversold. And we're not at the bottom of the Bollinger Band, but we are at the bottom where we have found support in the past. So we have tested this several times in the last 2 weeks, and we have not broken really through this bottom. And therefore, I kind of expect this to rally up towards the 20 exponential, the 40 or 50, or in best case scenario, towards a 100 moving average. And that would be a rally of roughly 1.8% to the upside. We have seen that in the past. This was basically in the beginning of September, and since then we basically dropped roughly 3%. So let's look at the Aussie dollar, US dollar. So this continues to test the 100 moving average. Last time we did that was over here, and then we dropped significantly. We are not overbought yet in the RSI. We are very overstretched here in the Bollinger Band, and the technical indicators are more bullish than they are bearish. But due to the fact that we got this heavily rejected last time, I kind of expect this to get rejected towards the 50 or probably to the very bottom here again. If we break this bottom, then we are going back towards this bottom here. That usually is what happens. So we're definitely in a downtrend, and I don't think that downtrend is going to break anytime soon. So let's look at the US dollar and the Canadian dollar. And so US dollar is depreciating. That should be bullish for this currency pair. Oil is also, no, it should be bearish. But oil is dropping today also a little bit, and that should be bullish for for this currency pair. So it has found a floor here at the 150 moving average, and that is a good thing. If we break below the 150, then we may see this drop all the way down back towards the previous lows here. That's a drop of roughly 3.3%. If we rally, then we are most likely going to find resistance here at the 100 moving average and definitely at the 50 moving average. So 1% or 1.6% to the upside. And that would be roughly just above the middle of the Bollinger Band. So we're on the edge of being oversold. RSI is, the MACD is bearish. RSI is flat. CCI is bearish. Stochastic is bearish. So momentum is definitely the downside, as we have seen here recently. But due to the fact that we're holding on here, it could mean that we'll rally in the next few trading days. So let's look at the S&P 500. So S&P 500 is, let's also look at here, stocks. We can see that we did rally up towards the 50 moving average and then broke down yet again. And we're kind of holding on here. If the 150 is probably as far as this will go. And probably the bottom here of roughly 4,300, it should also be an area where we'll find massive amounts of support. But the market is hanging on at the moment, and there's some good news. Not from Apple, that is expected to drop, but for example, the banking sector, that is expected to rally. So it is just a pullback similar to the things that we have seen in the past. We had a really good rally the last 3 months, and now we're pulling back roughly 8%. We are dropping 5.6%. That's not a lot, not a big drop. Usually drops 10 to 12% before going higher. MACD is flat, RSI is bearish, CCI is flat, stochastic is bearish, and we are struggling here at the middle of the Bollinger Band. If we look at the cloud, we can see that we had a crossing here. This was basically in the 20th of September, which basically was a selling signal. We're kind of inside of the cloud at this point, and usually that is not a very good place to start buying or selling due to the fact that we're not in an uptrend or a downtrend at this current stage. So let's look at the Nasdaq. So Nasdaq is also struggling here at the, get it up, at the 100 moving average. We did rally up towards that yesterday and then broke down. We are up in pre-market, futures are up, but we need to break above the 50 moving average in order to go higher. If we drop below the lows yesterday, then we are most likely going to go to the very lows here, which is 14,400, give or take, just above the 150. 200 moving average is right here. So we haven't had a massive fall here or drop here. 8.6%, that is not a lot. Down towards the 200 moving average, that is 10%. That is more common. And down just underneath the 200 moving average, we have 12%. So last year it dropped, give or take, 15% before recovering. So 13.6% before recovering. And we also saw the drop here in March of roughly 10%. And also here, roughly 8%. So 8%, 10, 12%, all areas where usually the market turns around after a fall like this. Doesn't mean that the market is going to collapse like it did in the last year or March last year. That is basically a pandemic that happens once in a century, so I wouldn't bet on that. But usually see drops of 10%, 12%, and also 8%. And usually those are the periods where you can buy things cheap and hold it for at least a few months or probably a year. So if you look at the MACD, it is bearish, RSI is bearish, CCI is bearish, and so is the stochastic. So momentum is definitely to the downside. Probably the market can lift this a little bit up as there is quite a good news about the banking sector and so on. So if we look at the big stocks, we can see that Amazon is still basically in the middle of nowhere. The highs here of 3,760 and lows at 2,895. So betting on Amazon at the moment, you could probably make a case that we are at the 300 moving average, but we are basically underneath the 300 moving average. So it could drop towards this support level. It could also rally to the very highs. And at the moment, it is kind of 50-50 a bet. If you look at the MACD, it is bearish, RSI is bearish, CGI is bearish, and stochastic is bearish. So the momentum is definitely to the downside. So Google was down 1.5% yesterday, approaching the 100 moving average, which was has proven to be massive support recently. Drop below that, then we have the 150 down here, and that's another drop of give or take 7% to the downside. And there you probably have as far as this will go. That's quite far, but there's roughly 13% pullback. But if you look at the historical pattern, then the 100 moving average and 50 moving average have most likely been the common places where buyers come back in and buy the upside. So Apple is down 0.5%. It's I was hoping for this to drop towards the 200 moving average. That's around $135. But if their production is going to be cut, then it is very likely that they will miss their profit estimate, and so they may go significantly lower. Yes, let's look at Microsoft, because Microsoft was expected to rally, but did quite poorly yesterday, down roughly 0.5%. And if it drops below the 40 exponential, then we may see this drop back towards the 100 moving average, and that's a drop of 3.8% to the downside. So, yes, the big tech stocks are not looking very promising at this point. The same goes for Netflix. It is dropping as it was significantly overstretched. If you look at Tesla, it is probably the one that is doing the best of these tech stocks, but it is also approaching the top of the range here, which means that it could drop back towards probably 770, 65 or give or take. It is significantly overbought now, overstretched, and the pullback is expected any time. If you look at Facebook, it's probably the one that is most interesting of these tech stocks. It has been battered, and it has dropped all the way down to the 200 moving average, has lost 17.5%, and found massive support down here at the 200 moving average. And that's a very good sign for this stock. It's on the edge of being oversold at the bottom of the Bollinger Band, and it doesn't mean that it's going back to the very highs. It only means that we could see relief rally for this stock going back towards the 50 moving average, or probably to half of this drop. So give or take back towards 140 or that area before dropping further if it's going further. MACD is still bearish, RSI is bullish, CGI is bearish, stochastic is bearish, and we are basically at the bottom here of the Bollinger Band. So we can go and look at the gold market and silver market, because they are also doing quite well today. So silver did rally all the way up towards the 40 exponential moving average, and then gave most of those gains back. We're only up 0.17% today. And yes, it is definitely in a downtrend, and we are basically at the top of that trend. So if we make a line here, roughly around that area, we're basically at that top of this channel, and this only means that we could be expecting silver to drop, even though it had a fairly good rally this morning. It got to the top of the Bollinger Band and then pulled back. And if you look at historical, the 50 moving average, 40, and the 20 exponential have all been areas where it found a massive resistance. So I think that CPI number is out now. We can go and look at the CPI number. It should be right here, and it is exactly at 4. So it hasn't changed and is exactly what the forecast basically told us to be. So That technically means that we will most likely see no change whatsoever. It is that inflation is fairly high, but it is not significantly higher than what we normally would see. So, expecting the Federal Reserve to increase interest rates earlier due to this inflation or CPI number, that probably has gone out the window yet again. So if we look at, we can go and look at gold. We can see that gold did rally all the way up towards the 50 moving average and then gave most of those gains back. It was up roughly 1%, and now we're basically dropping back down. We are definitely in a downtrend here, and the 50 moving average has offered resistance in the past. So has the 200 moving average, the 100 moving average, and also the 150 and the 300. So it's a massive amount of resistance above. And due to the fact that we have been rejected twice at the 50 moving average here, not a very good sign. If we break the lows here of 1723, then it opens the door to the very bottom here, which we have tested three times in the past. MACD is bullish, RSI is bullish, and so is the CCI, and so is the stochastic. So momentum is to the upside at the moment, but it is running into a brick wall every time it gets to the 50 moving average, and that is definitely not a good sign. So, anybody questions? Yes, so we can go and look at, for example, the energy sector, because that is probably the thing that most people are interested in at this current stage. So we will start by looking at the WTI oil, and as you can see, oil is pulling back at this stage, down roughly 1% and trading at 79.43. Stochastic has crossed the signal line, it's still above 80. So it's still bullish. If we drop below this, then we more likely will see this drop towards the middle of the Bollinger Band, which is at the 75. And that should be where we find buyers come back in. If you see it right here, they buy in here, and also buy here. So it's around the 20 exponential, or the middle of the Bollinger Band, which is the 20 simple moving average, where buyers come back in. So it's kind of waiting game. No interest in basically of buying, selling this at this point, as we are basically in an uptrend. MACD is also turning around here. Question is whether or not we basically cross the signal line. If we do, then we could drop even further, probably to the 50 moving average, or towards the bottom of the Bollinger Band around the $70. But that is not expected at this current stage. If you look at the 4-hour chart, we are basically we have gone through the 20 exponential and are heading towards the 50. And if 50 drops, then we are looking at 77.5 and then down towards the $75. But in the past, it has bounced off the 50 moving average, and we may well see it bounce off the 50 moving yet again. So going down towards the $78, it may well be that we'll see something similar to this and then rally significantly to the upside. If we look at weekly for this market, it is creating a little shooting star here, which usually means that it will pull back. And if it pulls back to major support levels, which is the middle of the Bollinger Band, which is at 71.72, or the bottom of the Bollinger Band here, which is at 63. That is a very bearish, very bearish forecast. More likely that worst case scenario, it will drop towards the 71 or around 70 level. But we have not had a crossing here of the MACD in the weekly chart, but this candlestick here is kind of a big warning sign that we are about to pull back. We are overstretched, and yes, that's kind of what that candlestick usually means. So natural gas weekly, we can see that we have started to, last week we had a massive shooting star here, pull back all the way down towards $5.23, and since then we have recovered quite a bit. So stochastic is still showing this going lower. We are significantly overbought here in the RSI, but the MACD is still very bullish. So we have seen this really tight at the top of the Bollinger Band for months now, and we could drop. If we drop below this candlestick here or drop below $5, then we could go to the middle of the Bollinger Band. But due to the fact that there's such a shortage of natural gas around the world, it is not very likely that we'll see such a big pullback. If you look at the daily chart, it more tells a story of people buying in when we are at the middle of the Bollinger Band. You can see it right here. When we rally, pull back, rally, and now pull back, and yet again rally. We're up, give or take 0.13, 40% at this current stage. And if we manage to take out these candlesticks roughly at 5.8, then it's very likely that we'll go back to the upside. People were definitely buying in when we're at this level. So if you look at the 4-hour chart, we can also see that we have been struggling. We have been rallying up towards the 50-moving average twice here, and also the 20 exponential, and have been rejected. But people were definitely buying in at the 200-moving average down here at roughly 5.28. So if you look at also the technical indicators for the 4-hour chart, and they are turning around. So MACD is bullish, stochastic is bullish, RSI is bullish. So the next 4-8 hours, we could expect this to rally at least towards the 50-moving average and probably beyond that. Yes, and we have the cryptocurrency market. So Bitcoin is struggling at this current stage. We were down yesterday. We're down yet again today. We are finding support around 53K, and if that breaks, then the 20 exponential moving average probably will be as far as this will go. It is the previous highs here, and usually it bounces off the 20 exponential. Worst case scenario, down towards the middle of the Bollinger Band, which is at 48K, and if that basically breaks, then we are most likely going to see this tumble much further. MACD is still bullish, stochastic is bearish, and the RSI is flat. If we look at the weekly, we can see that we have basically bounced off here, so there's no crossing of the MACD at the signal line, and it is basically bullish in the long run. We can also see the stochastic is bullish and the RSI is kind of flat at this point. But it is creating a minor shooting star here, and usually that is a warning sign. So we may see this pull back towards the top here, roughly 50K. Worst case scenario down towards the middle of the Bollinger Band, and after that all the way down towards 40K. But at the moment, this market looks more like it's going to bounce higher and going to retest the highs yet again. as people were buying like crazy when it got down towards the 50 moving average here at 40K. So Ethereum has been basically has created a double top here. So this was significantly overstretched, so we're just going to ignore that. But here it kind of makes a double top, and we pulled back towards the middle of the Bollinger Band and then started rallying. And at this point, it looks like we're going back towards testing this double top. If that breaks, then we are probably going to see this rally substantially further. If you look at the daily chart, we can see that we are bouncing off the 20 exponential moving average, and definitely the 200 moving average in the daily chart has been massive support. You can see it right here. We can also see the area here got fairly overstretched, but still getting close to the 200 moving average is where people are basically buying in. So if we were to drop below here back to the 200 moving average, is a fairly likely that people will start buying in at 2,700, give or take. If you look at the technical indicators, we can see that MACD is turning around, becoming bearish. Stochastic is bearish, and the RSI is bearish as well. I use TC2000. It is really fantastic for making analysis. Far better than Etoro's charts and so on, and therefore I mainly use that software. I just got used to it. I will change over to TC2000 yet again because I'm going to do the scan for the market, which I usually do, which basically scans whether or not stocks are overstretched or overbought, and kind of gives an impression of where we can find overbought stocks which are expensive and expected to pull back, or oversold stocks which are very cheap and could be rallying. So it has a scan function here, a pre-built analysis, and what you basically test for is the Bollinger Band, whether or not prices are below the Bollinger Band or above the Bollinger Band. So below the Bollinger Band is here, and then you can basically scan the Nasdaq, for example, and you see that there are 3 stocks that are significantly overstretched, for example, in the Bollinger Band. And instead of going through all the stocks in the Bollinger Band, you can basically get the best stocks right away. So this is Intel Corp's, and as you can see, it fell off a cliff basically yesterday, down to 2.38%. And you kind of have to look also at the stocks, at these companies. For example, Intel is a very famous company, but it has not been doing very well the last few years. As you can see, it is down from the highs here, roughly 23%. So there's a lot of competition in semiconductors, and they are kind of falling behind in some aspects. But it is very overstretched here and on the edge of being oversold. It's not oversold yet, so it's not a stock that I've been very interested in basically looking at. If it drops below this price level here, which is at 51, then it's going to go significantly lower. If it bounces, then it'll probably go up towards the 100 moving average. So the next on this list is Texas Instruments. You can see that it has also is underneath the Bollinger Band. It is not oversold yet, but it is touching the 150 moving average, which in the past has been massive support. So if it stabilizes here, then it could be an interesting buy-in. If it drops towards the 200 moving average, it probably would be an even better buy-in. It is down roughly 6% from its highs, so it's not a massive drop. So other technical indicators for this are basically showing that that is about to drop even further because the momentum is definitely to the downside. So next here is microtechnologies, and this is looking more like a stock that needs to rally before going lower. Trend is definitely negative. It is down roughly 31% from its highs. You can see the RSI here, significantly oversold. It's outside of the bullish band, and other technical indicators are showing momentum to the downside. But due to the fact that it is so oversold and so overstretched, there is a chance that this will rally up towards the 300 moving average or the 50 moving average. And that's a rally of roughly 7 to 9%. So, because it will not go to zero in the RSI, and therefore it could be an interesting stock to hold for probably a few days or probably a week, just in order to catch that rally. So if you look at the stocks that are over, for example, are overbought or over, get rid of this, big cap. Now I just looked at the Nasdaq, but there's only one that is significantly overbought. And that is also fairly interesting because it has a shooting star here. So it did rally above the middle, above top of the Bollinger Band, and then created this shooting star. So if we get a red candlestick here today, then it's more likely that will drop towards the middle of the Bollinger Band, which is a drop of roughly 2.8%, or the bottom, which is 6%. So that may well be. So we got rejected here at the 50 moving average, which is other indication that that this probably will go back down. But if it goes above, if it closes above the 50 moving average, then it's more likely that will go higher. It's also head and shoulders pattern here, and it will be interesting to see whether or not this rolls over or if it closes above the 50, because then it becomes more like a buying opportunity than a selling opportunity. If you look at the S&P, there should be far more stocks that are overbought. So this is MGM, and as you can see, significantly overstretched, overbought, and therefore a pullback kind of is expected. I don't know really what happened here, but this is a massive rally. So it's up 9.6%. So sign of weakness, there's probably an opportunity to basically sell this. Same goes for this, probably not as good. Same goes for VF Corp, is also significantly overstretched here and also overbought and running into the 50 moving average. So a pullback here could also be expected. So in this aspect, the TC2000 is far more advanced than most systems because you have a scan. And instead of going through all the companies in the S&P 500 or the Nasdaq, it takes only a few seconds to find stocks that are overbought or oversold. So, yes, anybody, any questions? So I'll go back to my trading, and hopefully this was helpful, and you're welcome to write to me if you have any questions. So good luck, and thank you very much.